For this session, we will talk about your tax on compensation income. So for your tax on compensation income, we said before, um, there are different items or major classification of items of gross income. So for gross income, we have first your gains or dealings. And we already know that there are items subject to RIT and subject to final tax in the form of capital gains tax. Also, passive income, you already learned when to tax it under RIT and when to tax it at final tax or final withholding tax. Also, you already learned how to tax your other items of gross income. Aside from that, you already learned how to tax your business or professional income when to subject it to RIT and final tax. So the last item that we did not yet discuss is the tax on your compensation. So the major items of income actually comes from normally comes from your business or professional income or compensation income. So the main items of income really comes from business or professional and compensation. So for today, our main focus is your compensation income. And we said again, under compensation income, it can be taxed under RIT or final tax. And the loan final tax is your fringe benefit tax given to managerial or supervisory employee. The loan fringe benefit tax or final tax is any fringe benefit given to your managerial or supervisory. All other else is subject to your regular income tax. So let's take a look into your employment or compensation income. Just like any other income we've learned, we look into the tax scheme. What is the tax scheme again? When do we tax it? Under final tax. And when do we tax it? Under regular income tax. So first, we look into our employment income, whether that employment income is in the form of a fringe benefit or purely compensation. If that is a fringe benefit, you need to classify the benefits. Sir, how should I classify the benefits? You classify the benefits if ever it is an other fringe benefit or the minimi benefit. You classify it as either fringe benefit or the minimi benefit. You all know that purely whenever we talk about gross compensation income, that is your employment income, right? And employment income can either be a an exempt employment income or a taxable employment income. So once it becomes taxable, we need to classify it whether it's a fringe benefit or a compensation income. So for compensation income, generally, you know that this compensation income is composed of your regular compensation, regular, and then we also have your supplemental. Okay. And under your supplemental, we have either your variable performance-based supplemental income or your fringe benefits. What are a common example of your variable compensation income? We have your hazard pay, holiday pay, overtime pay, etc. So we need to classify it. If you classify it purely part of compensation, meaning regular supplemental, but not fringe benefit, then it is subject to your compensation income like this one. How is that? We get first the gross compensation, we deduct the non-taxable compensation or those exempt compensation, and then the exempt benefits. Now let's go to your fringe benefits. We said under fringe benefits, we need to classify it. So how do we classify it? We classify whether it's other fringe benefit or a de minimis benefit. If ever it is the minimi benefit, you will only tax this one if ever it is excess over statutory limit. So there is limit. The excess out of the limit is taxable, and you treat it as other fringe benefit. So let's say, for example, the limit is 2,000. and you give 6,000. Therefore, the 4,000 is taxable. And how will you tax the 4,000? Treat it as other fringe benefit. Now, how do we tax a fringe benefit? We said earlier that fringe benefit can be subjected to a fringe benefit tax. So when can we tax it as as the fringe benefit tax? So we determine the type of employee who received the fringe benefit. If the fringe benefit is received by managerial or supervisory, managerial and or supervisory, or rank and file. If ever it is managerial or supervisory, it is subject to final tax known as fringe benefit tax. But if rank and file, it is treated as part of your regular income tax, but add it to 13th month pay and other benefits. So for example, we have an excess of 4,000 a while back. You add that to your 13th month pay and other benefits, and then you again subject it to the limit, which is 90,000. And then any excess will be taxable under RIT. So again, basically, you again need to determine the tax scheme in a compensation, just like what we have discussed in other types of income. Determine the scheme, determine whether subject to final tax or subject to regular income tax. Now we're talking about compensation income. So for compensation income, it can be subjected to RIT or final tax. So for your employment income or compensation income, we said it can be composed of regular and supplemental income. Your supplemental income can be further classified as variable income or fringe benefits or other benefits. Now, if that is a compensation in the form of regular or variable compensation, it is subject to RIT. But if that is a fringe benefit, you need to first classify the type of benefit. Is that other fringe benefit or a de minimis benefit? Now, for the minimis benefit, you will only tax it based on the limit. While for other fringe benefit, you tax it based on the monetary value. And then, once you get the excess of the minimis benefit, you treat it as other fringe benefit. So you have managerial and supervisory and rank and file. If that is managerial and supervisory, fringe benefit tax, but rank and file, the amount of fringe benefit will be added to 13th and other benefits. And this will be, again, subject to a limit of 90,000. If ever in excess of 90,000, it becomes now taxable under RIT. Now, having known the scheme or the general taxation for compensation income, let's dwell into it one by one. First item, we need to determine our employee. So how do we tax an employee? We tax the employee depending whether the employee is MWE or others. If ever it is MWE, you classify the income. So if the income is composed of your regular compensation plus Honsha, what is Honsha again? Honsha is your variable compensation income. Honsha means first, holiday pay. Next, overtime pay. NS means night shift differential pay. And then HA means hazard pay. Okay? So if ever, we said earlier, compensation comes from your regular and supplemental. For supplemental, we have both your variable supplemental income and also your other benefits. So we said, if ever that is regular MWE, if ever the income comes from regular plus the variable supplemental, it is exempt. But if ever other income, it is now considered taxable. Take note, an MWE is only exempt to its regular plus Honsha. And by the way, whenever we talk about regular, you already add there the COLA. COLA is the cost of living allowance. So if ever it is given a cost of living allowance, it is already considered exempt and included as part of that compensation. But other income, it is considered taxable. How about if other employee? If that is an other employee not considered as MWE, then the whole compensation income is subject to either RIT or final tax. And you already learned a while back when are RIT and when final tax. But who is an MWE? An MWE is an individual recipient of a minimum wage as fixed by RTWPB of the DOLE. So an individual recipient of minimum wage fixed by the DOLE. So if ever you are a minimum wage earner, then you classify the income. But if not, you don't need to classify the income because normally it is taxable, subject to RIT or final tax. For MWE, some income is taxable, some income is exempt. What income is exempt again? Regular plus your variable compensation or variable supplemental compensation income. So now, having known that, let's discuss your compensation income. So what is a compensation income? Your compensation income is the remuneration for services. And normally, this remuneration has different names. It can be salaries, it can be wages, it can be emoluments, it can be honoraria, allowances, or commissions, etc. So there are different classifications or there are different ways on how they name their compensation. But all in all, under the tax code, we consider that as compensation income. Furthermore, this compensation income uh, includes your fees, including the director fees, taxable bonuses, and your fringe benefits, except those which are subject to fringe benefit tax and the allowable de minimis benefit. That's why earlier, when we discussed the tax scheme, we classify the income, whether the income is based on your compensation or based on your fringe benefit. Because for fringe benefit, as provided under the law, this fringe benefit can be subject to fringe benefit tax or allowable de minimis benefits. And we already discussed a while back when is it subject to fringe benefit and when we do you tax the de minimis benefit. So again, we said compensation income is composed of regular compensation and supplemental compensation. So under regular compensation, these are your fixed remuneration for services. Fixed remuneration. Yun yung unang sentence kanina nung definition natin. So it is normally composed of your basic pay, your fixed allowances, that is your COLA, your rata, etc. And also your vacation and sick leave allowances are considered part of your regular compensation. Next, we have your supplemental compensation. We said your supplemental compensation is composed of either variable performance-based compensation or other benefits. So for your variable performance-based, we have your Honsha. What is Honsha again? Holiday, overtime, night shift, and hazard pay. Aside from that, we also have your honoraria, your commissions, honoraria, your commissions. Also, we include your retirement or separation pay. We also have your profit sharing or also known as your different bonuses. We can also include here your director fees and your value of stock options or leaving quarters, etc. So those are considered variable performance based. Next, we have your 13th month pay and other benefits. So under 13th month pay and other benefits, normally you have your 13th month pay, we have your Christmas bonus, we have your cash gifts other than Christmas bonus. We also have your additional compensation allowance if ever there is now a difference on your different compensation allowance. And then other fringe benefits, 14th month pay, 15th month pay, etc. So why is it important again to classify? Because again, there is different taxability depending on your compensation income. For regular compensation and variable-based compensation, directly it is RIT. For 13th month pay and other benefits, it depends whether that is a rank and file employee or managerial and supervisory. For managerial supervisory, purely the fringe benefit is subject to fringe benefit tax. while the others, of course, will be subject to RIT. But for rank and file, it is for RIT, for RIT. So it's very important for you to classify the income. And you know what type of compensation is given. Is it a regular compensation or a supplemental compensation? Now, let's look into the compensation income. In your compensation income, it is composed of your gross compensation, and then we have your non-taxable compensation. Also, we have your exempt compensation. First, under your gross compensation, we said it is already composed of regular compensation and supplemental compensation. Now, under non-taxable compensation, the non-taxable compensation are your mandatory deductions. And what are your mandatory deductions? Your SSS, your PhilHealth, your Pag-ibig, also your union dues. These are considered mandatory contributions. These mandatory contributions decreases your gross compensation. So gross compensation less non-taxable compensation. Lastly, less your exempt benefits. So what are your exempt benefits? Our mnemonic here is reset code name. So first, retirement benefits. It is an exempt benefit if ever you meet the requirement of 50-110. At the age of 50, it is your first retirement and you stayed with the company for 10 years. Therefore, your retirement pay is considered, or your retirement plan is considered exempt. Next, we have your separation benefits. If your separation benefits is given and the separation benefits is not within your control, let's say retrenchment, employment of labor saving devices, etc., as long as your separation was not due to your act, then your separation benefit is considered an exempt benefit. Also, we have your treaty or international agreements. If your compensation is a part of a treaty or international agreement, that particular treaty or international agreement is considered exempt. Next, benefits for convenience of employer. We have your convenience of employer rule. Any benefit given which will not really benefit the employee, but mainly benefits the employer. For example, you're given a house near the office so that you can go to the office anytime. That can be considered as convenience of employer rule. That convenience of employer will be considered as exempt benefit. Next, we have also your the minimum benefit within the limits. Again, we said if ever it is within the limits, it is exempt. While if ever it is excess, it becomes now taxable. And how do you tax? Either rank and file or managerial and supervisory. For rank and file, that is considered part of your 13th and other benefits. For managerial and supervisory, it will be subject to fringe benefit tax. Next, we have your benefits required by nature of business of employer. So what are these? Normally, these benefits required by nature, these are your different necessary expenses that is subject to accounting or liquidation. And since it is subject to accounting or liquidation, it is not really an income, it is more of an expense. And since it is more of an expense, then it is considered an exempt benefit. Next, we have also your benefits of minimum wage earners. It is considered exempt benefit. So gross compensation income, less non-taxable compensation, less exempt benefit is your total taxable compensation income. That is your total taxable compensation income. Now, let's discuss again your exempt benefits. We started a while back with your retirement benefits. Your retirement benefits, the requirement is that you must stay employed in the company for at least 10 years. It is your first retirement, and then you are at the age of 50. So 5110. Age 50, first retirement, stayed with the company for 10 years. And your retirement plan, of course, is considered as registered with the BIR. Then your retirement benefit is considered exempt. Next, for separation pay or termination pay, what you need to know here is the control of employee. If ever you separated with your employer because of the employee's own action due to employee, then it is considered taxable. If it's beyond the employee, then it is considered exempt. Next, we have your treaty or international agreements. So if ever the benefit or the compensation is due to treaty or international agreement, then that is considered exempt. Or if the treaty or international agreement exempts that benefit, then it is considered exempt. Next, we have your fringe benefits for convenience of employer. What is this convenience of employer rule again? These are required by nature or necessary to the trade, business, or profession, or for the convenience or advantage of the employer. So, since it is for the advantage, then it is considered exempt. The minimum benefit, we will discuss it later. Next, we have the nature of employer business. Again, if it is a necessary expense for the nature of employer business, it is more of an expense rather than an income because this particular expense is subject to liquidation. So it is an expense rather than income. Examples are rata, pera, traveling expenses, blah, blah. Also, we have your minimum wage earners. They are exempt on their regular compensation that includes your cost of living allowance and PONSA. But take note again, for minimum wage earners, they are considered taxable for other income. They are considered taxable for other income. Now let's look into your de minimis benefit. So for the minimum benefit, first for leaves, you need to determine whether the leave is given by private entity or the government. For private entity, for vacation leave, up to 10 days only, and for sick leave, it is taxable. Vacation leave, sick leave. While for government, there's no limit, so it is considered exempt. So whether vacation leave or sick leave. Therefore, if the leave is given to an employee, what you need to do is to determine the type of employee, whether it's an employee in the private sector or an employee in the government. Take note, there's a limit for vacation leave, and sick leave is always taxable for private. While for government, it is considered as exempt. Now let's go to your other de minimis benefit. The first other de minimis benefit is medical cash allowance. So for medical cash allowance, it must not exceed 1,500 per employee per semester, or it is known as 250 per month. Whenever we talk about semester, this is composed of 6 months. That's why 1,500 divided by 6 will give you 250 per month. So for 1 year, therefore, for 1 year, the medical cash allowance for 1 year is 3,000 pesos. Monthly, 250. Rice subsidy. For rice subsidy, it is 2,000 or one sack of 50 kilogram rice per month, not more than 2,000. So yearly, it is 24,000. Monthly, it is 2,000. Next, uniform and clothing allowance. It must not exceed 6,000 per annum. So yearly, 6,000 per annum. Next, actual medical assistance, 10,000 per annum. Then, therefore, yearly, that is 10,000. We also have laundry allowance, 300 per month. So the monthly is 300. Yearly, it is 3,600. Employee Achievement Award. For Employee Achievement Award, it is 10,000. That is the annual monetary value. For gifts, 5,000 per employee per annum. Daily meal allowance, 25% of the basic minimum wage. And then we have your productivity incentive bonus, 10,000 pesos. 10,000 pesos. Okay? So those are your different de minimis benefit. De minimis benefit. But take note, in the productivity or incentive bonus, if the 10,000 will now exceed, it's exceeding 10,000, then it is treated as other benefits. Okay? for 10,000, if this exceeds 10,000, the whole amount is treated as other benefits. Take note of this rule. All of these items, they exist. Treatment is either part of fringe benefit tax for managerial and supervisory, or part of 13th and other benefits for rank and file. However, for this one, the rule is quite simple. What is the rule? If ever it is less than 10,000, it is exempt. If more than 10,000, it is part of other benefits. The whole amount. Whole amount. Again, leaves and the others, you just need to get for the excess. Okay, let's say, for example, the medical cash allowance given is 5,000 per year. So what did we say? It is only 3,000 per year. Therefore, you need to get the excess. What is only taxable is 2,000. But if that is productivity incentive bonus under the CBA, if ever it is 10,000 only, then it is purely exempt. If ever it is 12,000, the whole amount is considered taxable. Ulitin ko lang uli. Lahat ng rules natin sa leaves and others, ang kukunin ay excess. Sa productivity incentive bonus, if ever it is less than 10K, exempt. If more than 10K, then the whole amount is now treated as part of your other benefits. Now, if it's treated as part of other benefits, how do we tax it? For managerial and supervisory, fringe benefit tax. While for rank and file, add it to your 13th month pay and other benefits. Okay? So you need to learn and remember the minimum amount for each type of de minimis benefit. Now, again, let's review the tax treatment of de minimis. The de minimis benefits, if ever it is excess over the statutory limits, then it is treated as other fringe benefits. So for managerial and supervisory, it is fringe benefit tax. For rank and file, you add it to your 13th month pay and other benefits subject to limit. What is the limit again? 90,000. If ever, pag inad mo yung other benefits na yon sa 13th month pay, hindi lumagpas ng 90,000, then it is still considered exempt. However, pag lumagpas, yung excess will be taxable. So, kumbaga, yung de minimis benefit for rank and file will go to a double limit. What is that double limit? Your first limit is the limit per your de minimis benefit. And then the second, if ever it did not exceed 90K, which includes now the 13th and other benefits, then it's still considered exempt. Okay, so example, your excess de minimis benefit is only 10,000. Your 13th month pay is 40,000. Therefore, your total 13th and other benefits is 50,000. If you compare this 50,000 to the 90,000 limit, then 50,000 is still lesser 90,000. Then this amount is still exempted. Okay? So first, you subject it to the limit on your de minimis benefit. Next, you add it to your 13th and other benefits. If ever it is less than 90,000, it is considered exempt for rank and file. While for the others, you tax it for managerial and supervisory employee. Next, we have your non-taxable compensation. So what are your non-taxable compensation? These are your different mandatory deductions. We have your SSS, PhilHealth, HDMF, and union dues. We already discussed this earlier. What is the effect? On your gross compensation income, which is composed of your regular and supplemental income, you deduct your mandatory contributions. And again, these mandatory contributions are considered non-taxable compensation. And again, deduct your exempt compensation to get for your taxable. We're done almost with regular. We're done with other items of supplemental, I think. And then for your non-taxable compensation. I think exempt yung natapos pala natin at saka non-taxable compensation. Now let's go to your 13th month pay and other benefits that we keep on talking earlier. 13th month pay and other benefits includes 13, 14, 15, etc. pay. Now your other benefits are the following. So we have your Christmas bonus or private employees, and then we have your cash gifts other than Christmas gifts. We have your additional compensation allowance, excess de minimis and other fringe benefit, any good service or other benefit furnished or granted by an employer. What is the difference by furnished or granted? Furnished, parang pinahiram lang. Granted, there's a transfer of ownership. So in furnished, there's no transfer of ownership. While for furnished, it is already transferred. So items of fringe benefit is either management perks or expenses shouldered by employer. So for your 13th month pay and other benefits, such as these items, so these four items, you add it to your RIT. Okay? So papasok yan sa 13th and other benefits. Excess of the minimi and other fringe benefit, if it is rank and file, sasama rin sa 13th and other benefit, subject to 90,000 limit. But excess of the minimi and other fringe benefit, if that is managerial and supervisory, fringe benefit tax. These items, if given also to managerial and supervisory, fringe benefit tax. But if given to rank and file, you add it to your 13th and other benefits, subject to 90,000 limit. Subject to 90,000 limit. Okay, so please do not confuse yourself when to subject it to limit and when subject to FBT. If it is managerial and supervisory, FBT. If R&F, subject to limit. So let's talk about your fringe benefit tax. For fringe benefit tax, the characteristics are as follows. First, it is a final tax. So earlier we already said that fringe benefit tax is a final tax. Next, it is a gross up tax. So why is it a gross up tax? We first get the monetary value, we gross it up, and then we multiply it to a particular rate. Next, your fringe benefit is applicable only to fringe benefits of managerial or supervisory, because if ever that is rank and file, you add it to your 13th and other benefits subject to 90K limit. So what are again your exempt fringe benefit tax? The exempt FBT is your necessity or convenience of employer rule. What is that? If ever what is given is necessary to the trade, business, or profession, or convenience or advantage of the employer, then we can exempt it to fringe benefit tax. Just like my example earlier, that a particular manager was given a house near the office so that if ever the manager is called, he can easily go to the office. So manager is always on call. So the particular benefit actually was not for the benefit of the employee, but for the benefit of the employer. Since it is for the benefit of the employer, then we exempt it to fringe benefit tax. Now, how do we compute for your fringe benefit tax? If ever it is citizen, resident alien, non-resident alien engaged in trade or business, your gross up rate is 65, your fringe benefit tax rate is 35. For NRA and ETB, the gross up rate is 75%, while the fringe benefit tax rate is 25%. Why? Because your citizens, RA and RAETB, can be subjected to your RIT, and the highest rate for RIT is 35%. So that is the rate. While for NRA and ETB, we said it is tax only on particular income here in the Philippines and subject to a same tax rate, that is 25%. So global system of taxation for NRA and ETB, whatever is the income here in the Philippines, 25%. That's why the rates here for NETB 25, while for RA and RAETB or citizen 35%. And as to your gross up rate, that is equal to 100% less the FBT rate. So if our rate for citizen RA or NRA ETB is 100% less your 65, less 35%, kaya nakuha ang 65. Dito naman, 100% less 25%, kaya nakuha yung 75%. So how do we compute again? Monetary value, gross up rate multiplied by your FBT rate. So our main problem here, since we already know the gross up rate and FBT rate, how do we compute for monetary value? So how do we get for the monetary value? For a property, it is the fair value of the property. So if ever you will give a property to your employee, whatever is the fair value of the property, that is the amount of the monetary value. For interest, we get the differential interest. Sir, what is the differential interest? That is 12% less the given interest multiplied by the principal. So let's say, for example, nagpautang yung kumpanya sa employee ng 100,000, ang interest niya is only 8%. The interest should be 12% per law, less 8%. So what is taxable is 4% of the 100,000 pesos. So the taxable is 4,000. That is the annual. That is the annual. Also, if ever the fringe benefit given is not in the nature of an interest, but let's say in the nature of life and health insurance in excess of what the law allows. So normally, there is already an amount which is considered mandated. That's why we have those mandatory contributions. But what if you give an insurance or life and health insurance to your employee in excess on the what the law allow? If ever in excess, whatever is excess is also considered fringe benefit. Okay, so for life insurance, normally we only add the excess on what the law allows. So as a basic rule, each employee already has the mandatory contributions. Now, if ever there is an excess out of that, then it is considered also as a fringe benefit. But take note, whoever receives that fringe benefit, if ever it is received by rank and file, add it to your 13th and other benefit. But if the benefit is received by managerial and supervisory, subject to fringe benefit tax. Next, foreign business travel. Take note, this is business travel, meaning the travel done by the employee is for the business. It is subject to a fringe benefit tax. For the airplane ticket, it is 30% of the cost of the ticket, while the lodging cost is in excess of $300 per day. So that will be the subject to FBT. Again, this is for business travel. But what if the travel is for personal? If the travel is for personal, also known as a traveling expense, then the whole amount. So if ever it is a personal travel, just like here in your expenses paid, the whole amount is considered subject to FBT. But if ever for business, then we have certain amounts. For first class airplane ticket, 30% of the cost of the ticket is considered subject to fringe benefit tax. While the lodging cost is if ever it is in excess of $300 per day, then it is also subject to fringe benefit tax. Why is there a limit here? There's a limit here because actually it's more of an expense. But since the employee already experienced some luxury due to this business travel, using first class and using high-end lodging, then the furnishing of that ticket and lodging is subject to tax, but also limited up to 30% only as to the cost of the ticket and $300 per day for the lodging. Now, for any other expenses, so that is any fees, if ever there are fees, let's say fees for membership, membership dues, social dues, athletic clubs, etc. So let's say, for example, the employee shouldered your due for PICPA membership. That is considered as a other fringe benefit. So we treat it either subject to fringe benefit tax or subject to RIT under 13th and other benefits depending on the type of employee. Also, if ever the employer pays the expenses for the household personnel, Let's say the employer gave the employee a driver, a household helper. The expenses for those, including their salaries, will be subject to fringe benefit tax. Holiday and vacation expense given to employee is also considered fringe benefit subject to fringe benefit tax. Just get the total expenses paid. Actually, what you just need to remember here are the following: for interest and for foreign business travel. For interest, life insurance, you just need to get for the excess. For foreign business travel, there's a limit, 30% for the airplane ticket for lodging costs in excess of $300. All others, whatever is the amount. Whatever is the amount. Now, once you finish determining the monetary value, you need to get or determine the percentage of that monetary value. Why? Because earlier we said your fringe benefit is any benefit given or furnished to an employee. What is given again? Whenever we say given, it is already transferred. While furnished, it is only for use. It is only for use. If ever it is already given, then 100% of the value. So for example, if house and lot is given to an employee, if the value is 4 million, then you tax 4 million at 100%. But if it's furnished, it is only 50% of the value. And for this purpose, personal property is assumed depreciable for 5 years, 20%, while real property shall have a presumptive life of 20 years or 5%. So what's the difference there? The difference is as to the amount of monetary value given. Again, if ever it is already given, 100%. If furnish only 50%, and generally you need to depreciate it. Depreciate it. So let's say for example, this house and lot, is only granted to the director of a company. House and lot is only granted to the director of the company. So assuming the fair value is 4 million, the fair value is 4 million. Now, how do we tax it? To tax it, the 4 million will be divided for 20 years. The 4 million will be divided over 20 years. And at the same time, that is only the annual tax. That is only the annual tax. Sir, why do we say it's an annual tax? Because, again, we are depreciating it per year. Therefore, this is the annual depreciation. Annual depreciation. So the annual depreciation is 200,000, right? So if that's the annual depreciation, you need to get the quarterly depreciation. Why? Why quarterly? Because fringe benefit tax is paid quarterly. Fringe benefit tax is paid quarterly. Therefore, to get for the quarterly tax, the 200,000, you multiply it to 1 over 4. Or you can multiply it to 3 over 12 whatsoever, because there are 4 quarters in a year. You can multiply it by 1 over 4, or you just multiply it to 3 over 12. So the amount of quarterly depreciation is 50,000. But should we already tax it at 50,000? No. Why? Because it is only furnished. If furnished, just get the 50%. Just get the 50%. So that is 25,000. You gross it up to the rate, 65%, multiply it to 35%. Then our answer there should be equal to 13,461.54. Okay. Before we move to the next slide, I told you that for fringe benefit tax, for fringe benefits, it is necessary to determine who received the fringe benefit. Is that rank and file or managerial and supervisory? If rank and file, where do you add it? You add to 13th month pay and other benefits. If managerial and supervisory, you tax it under fringe benefit tax. And under fringe benefit tax, you need to get the monetary value divided by the gross up rate multiplied by the fringe benefit tax rate. Now, for monetary value, you just determine the type of property given. Is that a property? Is it that interest? Is it life insurance, foreign travel, or any expenses? You follow our rules. So you need to know the rules under monetary value. After that, What is next is determine whether what is provided is either given or only furnished. If given, there is a transfer of ownership, you tax it at 100%. If furnished, you tax only at 50% of the value. And aside from that, you need to depreciate it over the life. If that is a property or personal property, 20% per year. And if ever it is real property, 5% per year. Because the life is 5 years for personal property. Life is 5 years. So in percentage, 20%. Life of personal property. For real property, the life is 20 years. The percentage is 5%. But you will not stop there. Once you get the percentage or the amount of annual depreciation, get only the quarterly. Get only the quarterly. Why do we need to get the quarterly? Because fringe benefit tax is subject to a quarterly tax. Therefore, what is tax only is the quarterly depreciation. So in our example, we got the annual depreciation of 200,000. You multiply it to 1/4, that is 50,000. We gross it up. The 50,000 is multiplied to the percentage of 50% because it is considered furnished only. And then we will get 25,000 divided by 65% our rate or our gross up rate multiplied by FBT rate of 35%. We get 13,461.54. Next, as to treatment. As to the treatment of fringe benefit, treatment on the part of the employer. For the employer, it is considered as a deduction. That is the amount of fringe benefit. And then the fringe benefit tax expense, if any. Fringe benefit tax expense, if any. And how do we file? We file using 1603Q. 1603Q. Again, it is quarterly remittance. Any form with Q means quarterly. Any form with Q means quarterly. Therefore, this one, 1603Q, is considered this is considered quarterly. Okay, quarterly. And when do we file? Not later than the last day of the month following the close of the quarter. Lastly, how do we file your compensation income? We said before that we use substituted filing for your compensation income. So taxpayer is no longer required to file income tax return as long as purely compensation income earner, one employer, withheld is equal to tax due. Alam nyo na yan. Napag-usapan na natin yan on our previous discussions before. Now, let's look into the filing of compensation income. Employer files BIR Form 1604CF, which is the annual information return for income tax withheld, while the employee will be given 2316 or 2306. If ever, 2316 for compensation payment on tax withheld, or if ever it is final tax withheld at source, 2306. Okay, that's how we tax your compensation income. Again, as a rule, how do we tax it? First, you need to determine the type of compensation, whether the compensation is part of the regular compensation or supplemental compensation. For regular compensation, we said generally RIT. Supplemental, it is either variable supplemental or other benefits. For variable RIT, except if it is within the non-taxable or exempt. So our exempt a while back is, we said that is your reset code name. Reset code name. Okay. And then your other benefits determine if ever it is received by rank and file employee or managerial and supervisory. For rank and file employee, add that to your 13th month pay and other benefits. Also, do not forget the rule under de minimis here. For managerial and supervisory, you will tax it under fringe benefit tax, even the excess of the minimis. If you can plot that in your mind, it would be easier for you to tax the compensation income. It is easier for you to tax the compensation income. For FBT, take note, Remember the rules on your monetary value and the rules under your gross up rate multiplied by your fringe benefit tax rate. And never ever multiply only the monetary value to 100%. You need to classify the monetary value whether it is given or only furnished. If given already, meaning there's a transfer of ownership, then tax it at 100%. Furnish 50%. And for real property, you depreciate it over 20 years or 5% per year. While for personal property, you depreciate it for 5 years or 20% per year. Okay? That's it for compensation income.